Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again on euro currency. So on daily intraday charts we do not have really big changes compared to what we have talked about on Friday before non-farm payrolls release. Major changes we see on the monthly and weekly chart, and it's very interesting the fundamental background right now for euro currency. So we have put our thoughts on this subject in our weekly report as usual. In the two words speaking, the two major driving factors right now for balance between the United States dollar and euro currency. First one is the inner United States dollar strength, that it's based on the good fundamentals, good statistics, increasing of the interest rate. But this source of the United States dollar strength is well known and mostly priced in. At least till the end of the year, I think that 70-75% of the United States dollar strength is already priced in. Second driving factor is the balance between the external policy between Europe and the United States, and it involves different geopolitical sphere, the nuclear deal with Iran, because it makes impact on the crude oil, and you know that the European Union and Germany in particular, the net importers of the crude oil. Economic trade war, the tariffs that really make impact on the sentiment in the European Union and makes impact on the exporters in Europe. So this is very powerful tool, and we have put the example how in a report, how the United States could manipulate the global markets by using the tariffs, because the United States have the space for the maneuver as it stands between the North America importers in the Canada, the exporters, and exporters in Europe, and also the exporters in another part of the world, in China, Turkey. And using the different exporters, it could initiate the tariffs against the other exporters and manipulate between them. So it's really very powerful tool. That's why the action on the of the euro in the perspective of the 6-8 months will depend on how Europe will be able to respond on this, whether it will find a protection, whether it will be possible to replace the United States market by the other markets, for example, and what the European Central Bank policy will be applied in this situation. If nothing will change, and Europe just will be on the second stage of this process, our basic scenario with the action to the 109, 110 area is possible. If something will change, in this case, maybe market will be able to change direction and will not form the weekly hand shoulders and start the upward direction back to the 126 top. So both these scenarios is possible, but which one will be taken, we will understand a bit later when we will see the new fundamental inputs in the process in a few months probably. But currently, in the perspective of 3-4 weeks, we probably will be taking the upward action as we think right now. It should reach area around 120, 121. So major 618 resistance could be reached here. It's upward action. And the starting point of this action is based on this bullish engulfing pattern. So take a look at the second candle of this pattern is rather bullish because it's almost a reversal candle as market has closed not just above higher than the previous session, but closed above the previous top, and this makes the engulfing pattern especially especially attractive. So trend has turned bullish. Usually, we use common features of the engulfing pattern that suggests two things. First of all, the target of the engulfing is the length of the bars, and if you count it to the upside, you will approximately get the area of confidence resistance on the daily chart, 118.10, 118.50 area. Also take a look, this will be daily overbought. That's why for a common week where we could establish the sale right around this area, so approximately 118.50, plus minus 10-15 pips. Second feature of the engulfing is the shape of the upward action based on this pattern. Usually on intraday chart, it takes a kind of the A, B, C, bottom, D pattern. So kind of the A, B, C, D pattern should be formed. That's two features that we intend to use. Finally, on the daily chart, we're watching for a downward retracement because we have small bread and butter sell in place. It has started well, as we have suggested, around 19.5, 117 area. It's also a confidence resistance on the follow time frame chart. And in fact, the result of this bread and butter should become the BC leg of our larger A, B, C, D pattern. But as you can see, the bread and butter hasn't quite reached the target. And it means that we should be careful on Monday, since market theoretically could continue move slightly lower. So anyway, let's take a look at the hourly chart where we try to understand what's going on. In general, as you can see, downward action looks a bit heavy. Even despite the good positive non-farm payrolls release and growing of the wages that suggests the rising of the inflation, the downward action is not really very fast. So yes, this was spiked down, where market has hit the OP target of this A, B, C, D pattern. Downward action has started right from the area that we have specified. It takes the shape of the catalyst tuple to sell. But you can see market, it seems that market feels some problems when downward action is choppy. It's not really very directional. That's why, guys, personally, I will not be surprised if market will not reach the target of the bread and butter, because it's look a bit heavy. That's why if you have taken the short position at the point that we have specified last week and based on this bread and butter, I think that's a good idea to move your stops to the break even. And also you could apply the partial taking of the profit. So if market will drop here to the weekly pivot points around 1630, close the half of your position and move the stop at the break even on the second half. If market somehow will reach the target of the bread and butter, that's very good. So you will complete the target. If not, you will get at least the half of the profit. Theoretical perfect target of the bread and butter stands right here. So take a look. We have the agreement support, 1518 is this ABCD pattern XLP target, and 1590 major fib support. So that's a theoretical target that should be achieved by the bread and butter, but who knows whether this will happen or not. So anyway, when this retracement will be over, we expect that market should reestablish the upward action, and we should get larger A, B, C bottom, wherever it will be by this retracement, D target, and that probably will lead us right to that area. So that's the trading plan for coming week.